Hello, everyone. Welcome to Drake's. Did I say drinks? I sounded like one lookout guy. Anyway, hello, everyone. Welcome to Drinks and Mics. My name is Ugo Dre, and I have here with me my two fellow drinkers.
That sounds like a drunkard.
I'm gonna put a glass of wine down.
So we're really white today. We're really white today. No. You guys are casual drinkers. I mean, like, except I can't vouch for you, Arnold. Though.
Yeah.
I know Twingy is a casual drinker.
Okay, yeah, I'm also a casual drinker.
You.
I like the fight
Let's use
stuff.
that word.
It's just that I don't go heavy. So
Anyway, everybody knows we have a whiskey fan. Let's give me whiskey any day, so long as it's premium whiskey. I'm down with that. Anyway, so this is Drinks and Mics. In case you're just watching this for the first time, we do this once every week or once every couple of weeks. It all depends, and we just basically dissect the Nigerian economy, African economy, and the global economy from all sides. And of course, we talk about some of the softer issues that's got to do with money and finance. So you should watch this show all the time. If you missed perhaps the first episode, you might want to go back and check that out as well. All right, guys, so a lot of things to talk about today. I'm going to start first with what's been on my mind, and it's the big macro. That macro number that we all look forward to every month, inflation.
Yeah.
So the inflation numbers popped.
Yeah.
And according to the MBS, I think I have that right here.
that had their website hacked.
Yeah, so
Sorry,
I don't know
small
whether it was
segue.
Oh, did they? Sorry, I missed
What I
that.
was
They had
because
that.
of the.
You didn't hear that?
Yeah,
missed that.
it was
It was
yesterday.
on their
really?
on their Twitter X handle.
Yeah.
Okay.
Like, hey, our website has been hacked. We're working to put it back up. Blah 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 blah. Da, 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 da.
Did the inflation number change when it was
what-
make it lower a little bit, 15%, budget price.
So whoever,
You know?
whoever did it,
Yeah.
just some highlights on what you might do.
Anyways, the reality is that inflation numbers was 34.6% for the month of November, and that is the highest that I've seen since
Yeah.
1996. 28 odd years.
Wow.
Last time we were anything higher than that was in 1996, and that was like
Okay.
in March 96. In fact, 96 still has a record for highest inflation rates that we've seen, like 40 plus,
Okay.
at least since the 90s. 34.6 is a bit disturbing. High. At some point, it looks like we were below 34 around June, July, August. Kind of looked like CBN policies was working.
Yeah.
But since the fuel price increase that we saw
It's
towards the
still-
end of Q3, I think that suddenly just pushed up inflation, numbers. And looking into that data, guys, there's lots of things there that got me really concerned. One
Okay.
was imported food inflation was pretty high as well. Yeah, like imported food inflation was not of 40% or thereabout.
Okay. Wow.
Close to food inflation too
Yeah,
was
it's wild.
not of 40%.
That is
Kind of looks
wild.
like those are the major drivers, and then core
Yeah.
inflation, which business guys tend to look out for as well, because
Yeah.
core inflation strips out some of those very volatile food inflation numbers. Was also pretty high, and
Yeah.
so for me, I don't know what else we need to do, because we've always said that inflation has always been a structural issue.
Yeah.
Supply side mostly, or maybe things like poor road network, insecurity, storage, and things like that. Always been a problem with inflation. I don't know what else the central bank wants to do, because they don't meet again until February, and we all know that the last time they met, inflation was on their mind, and we saw NPR go to 27.5%, still below 34.6%, which we have now as inflation numbers. And ramifications is, of course, likely you're going to see interest rates still remain elevated.
Yeah.
And then it now even becomes a lot more difficult to get foreign investors to bring money in with this sort of inflation numbers. And then, of course, when you also look at inflation differential between our own inflation and maybe inflation in the West, then that could have potential impacts for Forex. I don't know what you guys think.
I was concerning imported food inflation. I honestly did think it should have tapered by now. I mean, so in a former life, I used to follow this. So, and I can't remember how it works. Usually when you see, because we do know that when we saw FX prices, FX Naira to dollar, go to about 1.7 and all of that, we saw that a lot of the imported things were really, really going high. But once it stabilizes, I usually give it about a month to 2 months for it to start to feed into inflation numbers, for it to stabilize. But it's been like 3-4 months now that we've been around that 1.7, and it's still high. So I'm a bit concerned as to why it's still high. I don't get it. I'm still trying to understand.
I mean, inflation is also high globally. Right.
Well, that's
if you're speaking to imported inflation, then I mean, so a lot of things that we're importing is still pretty high.
Yeah.
And these things have different connotations, guys. So, of course, we spend more for imported items, but at the same time, locally made, goods can compete to a large extent, because
which ones?
Locally made food now. Rice, for example. I even think Nigeria made rice, from what I gather, is even more expensive or more sought after than foreign rice these days.
But let me ask you something, though.
I bet you don't know what kind of rice you eat in your house. Because you see the way you're looking at me.
Probably doesn't need any carbs. Doesn't need any carbs. What rice? I haven't eaten rice in 10 years. But for me, let me ask you, is inflation... is it a money supply? Is it a liquidity issue, or an import or an FX issue?
So inflation in Nigeria has never been...
it's a question that I want to ask. Is it... Because if it's an FX issue, then expect it to be high and stay high as we go into a stronger dollar environment.
I'll drink to this question.
But if it's a liquidity issue where there's liquidity... and a money supply issue where we're seeing that the central bank is actually trying to make efforts to reel in M3 or M2 money supply, then perhaps we can say it should taper off.
No. So we've never. It's never been a liquidity issue.
Okay. So you think it's an FX issue? You think it's a
traditionally? I've never really seen when CBN hiked rates and it affected inflation directly.
Okay.
At least in I don't know, maybe 10-15 years. The effect is always around FX stability, around supply, around less demand. It's usually, and again, you must also look at the composition of our CPI. It's the 50% of it is about food. It's the composition. So anything that has to do with consumption, domestic consumption, will drive inflation up. So I think when we do the repopulation of that basket, maybe would be able to have it better.
I don't think so, though.
That's cheating a little bit.
No, that's not cheating. That's not cheating.
Okay, we know
we're
that
just trying to
imported
reflect
food.
What we currently...
So you must understand. You must understand
to revise
the reality.
It higher,
no,
or would it revise it lower?
No. So the realities are, inflation was captured or created. The CPI basket was created to mirror the effects of the average Nigerian's life.
Okay.
Right.
Yeah.
And the most people who basically are concerned about inflation are not those people a lot of the time.
Okay. Yeah.
So it's best we actually make it more to be more encompassing of the Nigerian reality than just food conversation. So it's mostly food, fuel, those things that have to do with your day-to-day living, and I think Nigeria is a bit more complex than that these days.
So I was just looking at the plans for rebasing. So just to give you a bit of context.
Okay. So, yes, I want to see that actually.
Yeah. So
yes,
currently, just as Tunji had mentioned, food inflation's weighting is 51.8.
It's always been that.
But in the next, when they do rebase, from what I gather, food inflation is going to drop to food and non-alcoholic beverage, just to be more specific. It's going to drop to about 40.1. Right?
Okay.
Still significant chunk.
Yeah, but it's still
and then
it's a big chunk.
Another significant changes. Housing, water, electricity, gas, and other fuels is 16.7% currently. That's going to drop to 8.4%.
Yeah.
And then now, health and transport is going to go up from 6.5 to 10.7.
Okay.
But where you see, I think, the most jump is with communication. And that is going to go up from, I think, 0.7 to 3.3.
Which makes sense.
Because
if you
we spend a lot of money on data and stuff.
So I like to assume that if you create an inflation basket, you are trying to get it to mirror what the average household
consumes. Yes,
right. So that's what they
exactly. So I modeled this, and
Yeah.
I didn't see that much difference. So I basically, my
Based on
model
your-
might be totally wrong because of some of my assumptions.
Yeah.
But I did try to model it as
Okay.
and I didn't see much difference with the numbers. So for me, and to your question, just follow up with Tunji as well. I think the biggest drivers of inflation in Nigeria, apart from the structural issues we have as a country, is mostly fuel price increases and exchange rate depreciation. So if you plot a graph over the last maybe decade and a half, you would see that it correlates with whenever you have a huge currency FX depreciation, because most people just immediately reflect this on prices.
In everything.
In everything.
So, transport, food, everything reflects.
But whenever
all
you
those.
see that little bit of spike, maybe transportation issues, insecurity related issues, you have that. But it tends to sort of level
Do you
up.
know one thing that would be crazy
sense.
that will cut inflation without us doing much? If we create large storage facilities to be able to house food, because a lot of food we create in Nigeria waste.
Yeah.
If we create large storage that makes prices of food items crash, you could see our inflation go all the way down.
I don't even think that would bring inflation down. I think what would likely happen is you would see whenever you have the base effects, which is what I think would likely bring inflation down faster than anything else.
Yeah.
Right?
Yeah.
So when base effects does happen, then if you now want to see inflation trend towards single digits, then that's when
you can do those
because
kind of
then
things,
with storage and all that, food prices can now be slightly lower, and even all those seasonal effects that we tend to have
will not affect it
won't
anymore.
affect it that
And
much.
in fact, one of the things we see with inflation is that you see that inflation usually historically drops around harvest seasons. If you check, like,
maybe
over the last 5 years, it's not
so
really.
that's what I'm saying. Around June,
But
May,
once
June, July.
when there's high
Tennessee.
supply, you see inflation.
So I guess the question is when. So I think for me, it's about the rebates. When does it kick in? Do we know? And now that we have, I didn't know that they had the rebased weighting. So I guess it might help me plot my inflation outlook. But when does it kick in? Do you know?
I mean, not sure they've announced when specifically, but I do know it's going to be sometime next year.
Yeah.
That is going to kick in. Now, remember that GDP rebasing is also kicking in next year. So that could really change the dynamics of Nigerian macros as we go on. So, I mean, so that's my own story.
But I wonder
for today.
If it changes it
First story,
to
actually.
the positive and the negative. I'll think through it anyway to see whether it makes it more inflationary or less inflationary.
That's what I said. I've modeled it already, and
Okay.
I don't see any major difference. And to Tunji's point,
It's structural.
we still need to deal with the
Inflation is
structural issues.
It's not. So for you to really make a dent in inflation in Nigeria, you need to remove those things that create those seasonal shocks. Or those, volatility that happens with the market. So you can't just always have an economy where if there's market volatility across the world, your inflation just shoots up for absolutely no reason. Just doesn't make sense.
Okay.
So that's my first story, guys.
Yeah.
Over to you.
I'm so giddy to talk about mine.
Let's go.
All right, so we're looking at the 2025 outlook, and just to kind of look at
Nigerian outlook.
Nigerian outlook, and for you to
Macroeconomic outlook.
outlook. So, and for you to do that, you want to look at what's happening in the rest of the world.
Yeah.
And coincidentally, yesterday, the Fed had their usual speech. I think it's our version of MPCRB.
It is.
And Paul made a few statements.
Yeah.
Now, if you, on first glance, listening to him, it sounded positive. It sounded like, first of all, hey, we escaped recession. So guys, thumbs up. Also went into talking about the fact that unemployment is still rising, but it's not a problem. Talked about inflation numbers also, that inflation might rise a bit, revising their previous estimates from 2.1% to 2.5%. Then they cut rates. And then did not give a definite indication of how many times they're going to cut rates in 2025. Now, the market expected them to cut rates like 4 times, right? Now, he kind of said they were going to cut rates like twice. Now, it wasn't like definite. So the idea really with a lot of the market is they were not really sure what his stance was. And especially when you look at the fact that he was talking about the new president of the United States, Trump, and his ideas with tariffs and things like that, how that will feed into inflation and all of those things. Now, the market left that conversation different from the way you and I left the market. Because immediately almost everything went down. The Dow went down, the S&P went down, even Bitcoin was down like 5%.
Commodities.
Right? And then, on the reverse, you started to see people to try to drive towards bonds and, go into treasury bills and things like that, which of course that yield is still going up. The question I have is, how does this translate into what is going to happen in Nigeria? Because there are a few things that are going to happen next year. One is that in January, Trump is going to become president again. Immediately, he's saying all kinds of stuff. He's saying, BRICS, you guys, all these things you're talking about, the new dollar, you better stop it. He's telling all the countries that export into the US, we're going to increase tariffs. Nobody knows how much those tariffs are going to be increased to. That is going to affect significantly parts of the world. That also means that those places that were normally looking to export into the US will now look to new markets. This changes the global trade conversation significantly. Now, I've put many things: the market reaction, Trump and his administration, global economics. How does Nigeria respond?
So are you asking us this question?
Let me say it again.
Okay.
How do we respond? Because now I'm thinking, where will I put my money next year, right? So we saw once Trump was announced, Bitcoin went up. The markets responded very good. Everybody was like, oh, okay, this is the time to go into the market. Even I was beginning to think, okay, I'm not bullish enough in this market. I'm seeing, some very positive trends. Yesterday and the day before, about a week, the reaction to the market kind of scared me a little bit. People are now going long in the treasury bill market, 10 years. It's like, I'm like, what's going on? Where do we stay? Where are we gonna hang our hat?
So
go ahead.
I chime in? It's just a lot going on, right? And where do I even begin? Because we wanted to start it off with a Nigeria outlook and what everything happening outside means for us in Nigeria. I think for me, I constantly, if you know me, I constantly speak about the carry trade, right? So if we look at 2011, 2012, 2013, one of the things that made Africa an emerging market attractive was the carry trade. And the carry trade is simply you borrow from a country with low interest rates and you invest in a country with high interest rates or a cheaper country. You had US treasuries, BOG, Japan, you had Western yields low at all-time lows, where there was 1% or 2%, some moving the negative. So the easy trade was...
Even Nigerians were doing carry trade.
Yeah, so the easy trade was to borrow dollars.
Max out your credit card, come out, buy houses in there.
But now what you're seeing is that 10 year that was at 1% is now 4.5%, 4.6%.
Yeah.
So... which just means that carry trade is not as attractive. It's not attractive anymore, right? So if you're having 10-year go up to 4.6, 4.7, possibly 5% next year, and you want to do that carry trade, you are going to need assets in emerging markets or Africa or Nigeria to be cheaper.
Yeah.
What that means is you need T-bills to be higher. You need equities to go down a little bit.
Yeah.
Or inflation to go up, so you know that equities can actually go rally up to inflation.
Or maybe Naira gets cheaper.
Yeah, and also Naira needs to get cheaper. Naira also needs to get cheaper. So now, but if you want, so that's what it means for us.
You want to think about the opportunity cost, right? Because everybody globally right now is thinking about where do they put their money, right? And Trump isn't playing around. This is his last time in office, so you know he's going to bring it, right? But in this 4 years where he's going to be there, he wants to do a lot of things. How do we take advantage? Because there's money to be moved from the US because of the volatility that is happening there.
No, but do you want to move money from the US when the US is doing very well? American companies are doing well. This is what I'm saying. It's hard for emerging markets and Nigeria and Africa because America is doing well. American companies are doing well. Why would you, as an investor, a dollar investor, buy an emerging market on African assets? And that's where I'm saying the worry comes. But it gets cheaper, right? Nigeria needs to get cheaper. Nigeria has to get cheaper. If you look at our budget, we need to borrow more next year. What does that mean? To borrow more, you need to attract more money. To attract more money, you need to raise yields higher.
Do you think we'll see more exits?
We will see more exits again because that carry trade is
No, I'm not trying to scare anybody. I'm not trying to scare anybody.
So let me explain. Which goes into my topic. Let me explain. I know doom and gloom. I know. Let me explain.
These are some gloomy
Let me explain.
Lord have mercy.
Look at the multinational companies and remember the carry trade.
Yeah.
The multinational companies had subsidiaries here. The carry trade was to borrow from daddy, a parent company, and invest in Nigeria because it was cheaper
factory,
to do that.
manufacture.
Right.
Yeah.
But now your dollar loans are going to get more expensive because
4%.
guess what? Yields are going higher. Why Powell is not cutting rates anymore, so it's getting more expensive for the subsidiary to borrow from the parent company. So guess what? And also don't forget that although my revenues are good, revenue is good, my top line is good, but I still have to report in dollars to the parent company.
Yeah.
So what does that mean? Naira is getting weaker, and Naira has to get weaker again because the carry trade isn't working. Emerging markets currencies get weaker. So there's no point in this multinational company operating in Nigeria anymore. Again, we have policy difficulties, FX is getting tougher, and the carry trade is getting more expensive. This is where I get out. So in this sense, we should see more exits, in my view.
So where do we put money? Where do we put money?
So what you do?
You guys have. You want to finish?
No. You go.
So you guys in one blow, you've said now that the Naira needs to be cheaper.
Yes.
Yeah.
And you've also said that
assets need to be cheaper.
Assets
interest
rates
need to go higher.
And all the equities need to be cheaper.
Yeah.
Even you need to be cheaper.
Even I need to.
Even
I need to be cheaper. Yeah.
Treasury bills need to go higher.
Treasury bills need to go higher because we borrow more. Yes, because we borrow more anyway, right? But for it to be attractive, treasury bills need to get cheaper.
So we need to probably increase interest rates. Yeah.
Even more.
If you're basing this on global,
we're not saying. So if you understand that you are part of the global economy, right? If you want to take part in what is happening right now, you need to do some of these things to be able to participate in the flow.
Guys.
Now, I'm not saying you have to. Because if you look at the conversation, right? Trump is definitely anti-China. At least in terms of production.
Biden was.
So he's talking about serious tariffs for China, up to 100% in some goods, and that is a definite conversation. So China is obviously going to start looking elsewhere, and they've already been doing that. The thought is, if we don't want to increase interest rates, we don't want to devalue, we don't want to get cheaper, basically, right? We need to do something else that, while that economic flow is happening, we still continue to survive. Because we can't bury our heads in the sand expecting that somehow flow is going to come from that economy when we are still as expensive as we are.
Here's my own prognosis, right? I agree that Naira needs to be cheaper, interest rate needs to be higher, equities need to be cheaper for you to attract capital flows from abroad. But where I differ is that has happened already. Naira has been cheaper, Naira has weakened, by over about 50% in the last 1 year or more. That is in the last 18 months. In the last 18 months. In the last 1 year, almost 40%. Equities were at an all-time low a year and a half ago. They're even still low now.
Yeah.
For some of the equities that we know. For the better part of the last 5 years, we haven't actually seen FPIs in our equities. It's been dominated by locals.
Yeah.
All right. So I don't think you really need FPIs to sustain the sort of growth we've seen in the exchange. We're likely going to close at above 30% this year. I mean, Naira-wise, dollar-wise might be a different conversation, but Naira-wise, the all-share index is 30% upside.
Great year for equity.
And inflation is high already. You've taken out first sub. So there's a lot of things that has been done that if you really want foreign investors to come in, or if foreign investors really want to come in, they will come in. Now, if you start to depreciate further, increase interest rate further, and try to make your assets even cheaper, then I'm afraid it's going to create a catch-22 situation. It's likely going to it's even going to worsen things, because then we're like, wait a minute, man, you guys keep getting cheaper. Like, so there's no bottom here, right? So what's the point bringing money here? So what I think is likely going to happen, Tunji, is I think next year it's going to be a transitional year for Nigeria, just like this year. Basically, things need to sort of
just calm down.
So you're not going to see a lot of growth next year. When I mean growth, I'm not saying GDP growth and stuff. I'm talking about in terms of maybe exchange rate. It might be slightly stable, but it could swing more to, closer to 1.8-ish, that kind of thing. But I don't see it going to 1.4, 1. So best case scenario could be between 1.5, 1.6-ish and all that next year. Inflation rate, if you don't see any more jumps like fuel subsidy removal and all that kind of stuff, or fuel prices go up, I think fuel prices being stable means inflation rate could be stable. Best case scenario, we'll see base effects help out. So if you look at those key indicators, I don't see very big upsides, but I don't see huge downsides.
Downsides also.
So I don't think there's a lot that we need to do again to attract foreign investors. Now, what would happen, Arnold, and you're already seeing it happen, is you're likely going to see a lot of debt binges happen next year. That's likely going to be the only way you can get foreign investors into the country. So Nigeria is likely going to tap into the European markets a lot more next year. You're likely going to see a lot of deals that would attract FX. You're likely going to see a lot of bilateral loans as well. So rather than just focus only on multilateral loans, you probably see bilateral loans between Nigeria and some one or two countries here and there, and all that. So that's what I think is going to happen. So that's why I said next year is likely going to be a transition year. So don't mistake me for being too bullish about Nigeria next year, but I'm just not as bearish as you guys.
No, I'm not bearish. I'm not bearish. I'm just.
Not with those kind of.
No.
You just said now that Naira needs to be cheaper.
No. As a matter of fact, equities
need to be cheaper. You even said you need to be cheaper.
As a matter of fact, I'm actually excited by the entire thing. I'm excited by it because it's a unique thing. So the global economy conversation. So there is the US conversation. There is the China conversation. There is the, to a small, tiny extent, the BRICS conversation. There's also the geopolitics.
Good. So from a geopolitical standpoint, let me just chime in on that as well quickly. There's also a bit of contradiction. So Donald Trump wants stronger dollar. But
he does?
Yeah.
He's always wanted cheaper.
No,
but the rhetoric
he wants a strong dollar.
And also everything he's been talking about is rhetoric in terms of America first.
Yeah, he wants a strong dollar. He wants.
It's quite inflationary.
Which that's why I tell you it's contradiction. He wants a strong dollar. Yet you want to manufacture. You want to move local manufacturing. You want to boost local manufacturing.
Yes, it's very.
You want
very strong.
Because I do remember his
so
first
gas prices
tenure,
can drop.
he was talking a lot about.
This time it's very.
No. What he was saying is that he was more around the Chinese currency that was too weak.
Yeah.
Right. And he's also not really big on global trade and all that.
Yes.
That's why he's talking about tariffs. So I kind of think that can slow down capital flows globally. What you probably likely see is a recession happen in Europe. You could see turmoil in some countries, political turmoil in some countries because of different things. You've seen Russia already. Putin was in the news today complaining about skyrocketing inflation in his country, and that could mean, have potential effects. So
what's the levels? I think they've done 50% before.
I don't know the exact figure now, but it's just rearing its head again.
Yeah.
After they sort of did well most of last year, but it looks like they're ending this year with a bit of a downer. So for me, a lot of stuff happening geopolitically, even in Africa. I mean, we can talk outlook all day today, even within Africa. A lot of geopolitical play going on. The Chinese are playing a very smart, quiet game. The French are also trying to play their game. Africa is also a lot smarter than they were before, trying to still be non-aligned.
Do you think the French are looking at us?
No, I think the Southeast Asia is coming here. Though.
Everybody's looking, but here's my fear.
Okay.
My fear is they're all looking, not necessarily because they are trying to be a beautiful groom or a handsome groom, because we're always the bride.
They're slightly desperate.
So what they're looking for is a market that can consume
their
the stuff that they're producing.
Again, as America makes tariffs higher, you're going to look for some place to dump what you're producing. So EV cars, for instance, you might not have noticed it, but there's a huge drive for EV cars to come into Nigeria. We're seeing all sorts of celebrities selling EV cars now, and you're thinking to yourself, what's going on here? But you can see it. If EV cars can't go to the US, then you need to look for a new market to sell it to. And I mean, Africa is always a
so
place.
Again, that's why. So for me, maybe what I expect to see, just to close this, is essentially you're going to see a lot of bilateral trade. I think that will underpin most of what we do next year. If we get that right, then maybe things can be better. But
which was the point? If we get it right, because I don't know. I asked
because that's the only option.
I asked Arnold off camera, who is plotting the graph for Nigeria.
Why do you think they've been traveling up and down?
And also,
I hope so.
Them issuing Eurobonds when they issued it because they expected yields to go higher. But this also goes into my topic and what's been on my mind. And Nairametrics, you guys wrote an article about it yesterday.
What's that?
It's the exits, right?
Oh, okay.
Because this feeds into the exits when you ask me, are there going to be more exits? And I said yes. But then there's also the play of what's next, right? And you're seeing it. Southeast Asia's coming, right? You're seeing Diageo leave and turnaround by Guinness. You're seeing Holcim and Coaxib. You're actually seeing that play where because of the FX translation issues and the carry trade issues, you're seeing these Western guys say, you know what, I've had enough, and they're selling these assets for cheap. Right? And Southeast Asia's coming in and saying, you know what, I'll take it. China's coming in, I'll take it. And for me, this is simply because they've seen this before and they've experienced this before. And something I love to talk about is the opportunity within the quagmire and the mess that's coming. And I like to go into history because I'm a huge fan of economics history. If you look at the late 90s, when you had the whole Southeast Asian crisis due to whether it was a mismatch of debt to assets to liability, where they were in Southeast Asia was so successful that they were borrowing dollars on the short term to actually build houses and buy stock markets or whatever it is on the long term. And after a while, you had this whole mismatch, and you had the defaults, and it just became a whole ladder, right? You had the Southeast Asian crisis moved into Russia and into Brazil, and in that period, you had stock market crash. You had currency crash. You had even Malaysia try the Buhari way of capital controls. No one can get money out, right? You had the same play by play of what's happening on the continent now. You had it happening in Southeast Asia, through to South America, through to Russia. Even Russia defaulted on the local bonds, right? Which sounds like Ghana, right? Which might be Nigeria soon. But but you had this whole thing. You also had a huge exit. I mean, Southeast Asia lost about $21 billion of capital in 2001. That's the exit they had. It was huge. But then you had local investors
Just
smart enough to say, hold on a minute, these assets are cheaper than anything. You had your JP Morgan scale back, you had your Barclays scale back, and then local assets, local guys buying oil and gas companies in Russia, local guys buying consumer names in Southeast Asia. And then when you had that rally, 5 years, 10 years after that crash, you had Malaysia return 800%. In 5 years, you had Russia return 100%. In 5 years, you had a huge rally in the stock market, but also in asset value, right? And for me, when I see these sort of plays happen for us, where we see this exit, I'm excited.
Yeah.
Because I'm like, hold on a minute, this is when we actually get capital together and we come together and we buy these assets, right? Because what the Southeast Asians are doing is saying, this is the same thing we saw, and we made a lot of money out of this, right? So for me, as a local investor, this is something we call an asset situation, right? When you look at an asset and you see that the asset is producing, right? On the top line, it's great, but the shareholder or the subsidiary is leaving, because he has to report to the parent company, and it's an FX translation issue. It's a policy. I can't deal with these policies anymore. Are they coming? Are they going? I can't figure it out. But as a local investor, you have the staying power, because we're not going anywhere.
Yeah.
Right. So I get excited when I see these exits.
But aren't we already
I get excited when I hear the bad
seeing
news.
the exits to local players like in oil and gas?
Yes. So we're seeing the local guys come in, the Seplat, the Aradel.
So is this a concern for you? I'm trying to figure out where you're landing.
No. He's saying let's get
I'm
money
excited
together.
about it. I'm saying the doom and gloom is actually an excitement.
Yeah.
Okay.
That's why I was excited about the other conversation.
On the street. And that's why for me I'm like, guys, it's going to be doom and gloom, but we need a shift in the paradigm of what we already know.
Yeah.
We're used to the carry trade. I'll borrow dollars and buy local assets.
This is the time we need to really work, do some work,
Yes, this is time to do some work.
Exactly, do some work. For a couple of years, we know we'll put our back into it, because there are a lot of assets that people are going to drop for whatever reason.
People already drop it.
For whatever reason,
Yes.
and so this is where I look at it with a lot of conversations, especially in what I do. Every time I speak to somebody that is not Nigerian about what we do, and I hear their perspective. Now, I always respect their perspective from wherever they're coming from. But when they try to explain to me what Nigeria should be, I always smile, because I'm in Nigeria. I'm on the streets, right? And I see what is happening on a day-to-day basis. There's a difference. And if we can put some of the professionalism that, international companies without the corruption, put into the business, I think we have the unique advantage to be able to do it better than they have done it. They've started it, we can take it to the next level, is my thinking. Okay,
so on this topic, I think I share some of your sentiments and your optimism around
our call to action.
Yeah, because it's good that as these companies are leaving, someone else is buying them, because you'd have been a problem if there wasn't anyone buying them, right?
Yeah.
But my thing is, we should be the ones buying them. Our pension
exactly.
funds
So I'm gonna.
We should be looking for.
I'm gonna get there in a bit. So, but let me start with my own concerns with exiting.
Okay.
So, when companies exit, they tend to exit with a lot of technical competences and capacities, and so it's often difficult to find
to replace those.
Yeah, to replace them. So let me give you an example. I don't want to name names, but there's a very popular supermarket that is in a very popular mall, one of the very first malls.
We know it,
right?
Yeah.
Exactly.
We know it.
Name it.
Yes.
But the supermarket always had Nigerian.
No. So it was basically South African participation, right? South African owned, and then when they exited, it's not been the same, because they exit with some of the value chain they have, some of the financing they have, some of the network of distributors they have and manufacturers there. So they leave with a lot of stuff, and it can be very difficult for locals to pick up, because again, cost of capital here is pretty much expensive compared to maybe if it's Southeast Asian companies or that are picking these things up, because capital there is cheaper.
Yeah, of course.
And so that is where I can have a little bit of concern. I mean, can we continue to be consistent with the sort of quality and standard that they had? And then there's some of them that also left that no one picked up. So what just happened is that they were probably just replaced by a competitor. Right. So from that point of view, But now, on the positive side, yes, huge opportunity for companies to pick them up.
We saw
to buy them up. So we've seen all that happen. My only concern is that I just hope, because I know in 2014 this thing happened, man, and we picked up assets when crude oil prices were pretty high, and a lot of those assets were expensive. But I think maybe the pricing now is a little different.
I think what we should learn from that time is the pricing, because we took very expensive.
What I think we should be doing, and I think that the government should encourage this. There should be a flow, and I know I talked about this last week, and you guys were like, cool. That cool word. Cool.
Coerce.
So I'm trying to be careful not to say coerce.
Initiative or what?
No coerce show.
You changed it.
Anyway, so
you can see how everybody agreed with us, right?
Everybody
that watched it agreed.
We have to find a way of getting these guys as well. Because I mean,
he's doing it again, right?
Encourage. We gotta encourage them. To broaden or maybe deepen the capital base, because that's always been the problem. So you borrow to buy these assets. I'm talking about locals now. You borrow at 20% or so to buy these assets. Right. And you buy the assets, and then you hope that the revenues
will be able to cover
the interest payment. So what now happens is that you really can reinvest in these assets.
100%.
And so that's where I have a problem, and that's where that kind of money or that kind of asset can flow into the capital market.
So that's one thing the Southeast Asia or China did that a lot of people aren't talking about, is they went through a period of financial repression, right, where the policies forced banks, and literally forced the banks to lend to businessmen or particular businesses that wanted to carry out certain businesses. There was a policy placed, which is the coercion part, right? So you have to force the banks, you have to financially repress them to say, listen, you have to, if X and Y go to the bank to say, I'm trying to buy that business, you can't lend to them at 39%. You lend to this guy at 5%.
Who's going to do that?
Well, that's where the coercion comes in, right?
How?
Well, you talked about coercion, so I'm saying that it has to be.
You can't coerce Bank of Industry to
no, but we already do stuff like this. Not for buying assets. We already have, like the Bank of Industry, the Bank of Agriculture tend to lend at single digits. For you want to buy assets, you want to buy implements to be able to manufacture. Exactly. Yes. We already do this, but if it is in the conversation of actually purchasing high value, heavy intense industrialized assets, there's no mechanism that goes directly because we don't have a bank of conglomerates, for instance, that you could go to and say, hey, which I'm thinking of which company that is would want to exit, and I'll say, okay, so for instance, if MTN said, okay, I'm leaving, which bank do I go to and say that understands immediately that and can give me all the money I need? Not that I have to talk to you and I have to talk to him, and I could go to one bank and say.
So that's the problem I have, Tunji. So the methodology for acquiring these assets, or the model for acquiring these assets, has always been flawed. So in Nigeria, what we basically do is some form of leverage buyout. So you get a loan, you buy out a company, and then you start to basically milk that company to repay that loan. Okay, then you don't now have a particular exit plan for that company, and so one way or the other, that company either ends up dying or never really grows. And so for me, my point is, as much as we're saying we're encouraging locals to buy some of these assets that the West is probably just abandoning and leaving, we have to find a mechanism that allows us mix the sort of capital that we're using to acquire those assets. It's got to be a mixture of debt and equity.
Yeah. So we have the stock
gotta
market.
find a way of doing that because
then
because when you mix debt and equity, Arnold, what now happens is that you have a deeper, richer capital market.
Yes,
you have people that can invest. Everybody essentially shares in that wealth.
Yeah,
NGX.
Well, you know what it is. We have these instruments. So we have a corporate bond markets.
FMDQ.
Right. FMDQ. Thank you.
Yeah.
NGX.
I mean, we
actually have
we could
the
do
exits, and we have we just don't. I guess we just don't exercise. We don't execute. We don't.
So I think that these things are muscles that we need to build. We've just not built them well enough. So maybe start pushing some of these things. But it starts with wanting to even acquire the exit. So if you are a foreign co and you're looking to exit, you want to talk to us?
He's always plugging. He's always plugging. What company would you like, Tunji? What do you want? MTN? What do you want? What do you want? What do you want?
Anyway, guys,
before we go to the wine, so I recently got into wine. It's not been my thing, because generally, alcohol as a whole, if you drink the cheap stuff, you would always hate it because you'd be like, what the heck? Why do people drink this thing? And then one day you taste a really nice one and you're like, So without naming the name, which is this?
Or can you give us a description of the robustness of the?
Because it does taste good. It does taste good.
Yeah. It's a nice Italian wine.
It is.
Okay.
Without naming names.
Not bad.
Yeah.
It's actually it's dry.
Yeah,
you can feel the heaviness. You can just looking at it.
Yeah. We have a decanter as well, which is always a nice look.
I always like decanters. The decanter just got to mask what it is you're drinking and all that.
With some cheap wine in there. We have a decanter there.
No, that's not what we did. Anyway, guys, this is Drinks and Mics, of course. We do this once in a while, and we just basically discuss global and local markets in a very relaxed manner. And I'm Gudre, and I have Tunji and Arnold here with me. So I'm going to segue into the next thing on my mind, and it was yesterday. The most powerful president Nigeria has ever seen was at the National Assembly yesterday. See, I can argue with you on this one. If you want to take me on this one, I will tell you that this guy is the most powerful. Not even Babangida or Abat. This is the most powerful.
I still think Obasanjo is my
dude, man. Obasanjo had opposition.
Yeah, he did.
He had opposition. He did. Like whether it was some state governors that were in with him, or some politicians that were in him. And at that time, we even had a party. We had like three parties.
So are you saying strongest or most inclusive? Because
strongest.
Obasanjo,
I don't know about inclusive.
In terms of force, I think it was. But this
is the strongest.
This president seems to be very inclusive. It's like you hear very little of what he wants to do, but he does it anyways. It's almost like I don't need to say it outside. I just need to talk. Exactly. He feels like that, right? He feels like that.
So for me, yesterday was just a huge demonstration of that. And of course, it has its advantages and disadvantages. I'm just going to focus on the advantages. And watching the National Assembly yesterday give all that accolade and all that. In fact, at some point, Akpabio was like, man, you've done so well that even though you're on 50% budget performance, I am happy to extend this year's budget to June 30th next year, man. So it's almost like you get 5 over 10 and then you just said you've done so well.
I'll give it an 8-star.
Very good.
Next year.
With a smiley face.
Carry over the rest. Anyway, so I mean, jokes apart, the president eventually came out with the budget, everything that we expected. I think we already saw glimmers of that at the MTEF, that's the medium-term expenditure. For the 7.9 trillion budget, another, mega fiscal deficit of 13.3 trillion.
He did talk about revenue though. He was
revenue was 30 something trillion, which is also a record in terms of expectations. So before I get your view, so my own view, dollar-wise, $30 billion, good budget that could maybe restore. I think he called it budget of restoration. Maybe restore some kind of hope in what they're trying to do. But my concerns would always be around that fiscal deficit number.
Yeah.
So we targeted 8 trillion this year. That was the budget. We're likely going to beat that number because we're already on 7 plus fiscal deficit, and now we're going at 13 plus trillion. So fiscal deficits do have effects on exchange rate because it means you're going to borrow to finance that, and you're going to likely borrow mostly from foreign sources. And when you borrow, that has typical effects on your exchange rate. So for that reason, you think exchange rate might not appreciate as a lot of people are hoping. I doubt that's going to happen. And then I also noticed that there was going to be huge spending on debt servicing. Debt servicing was just second to capital expenditure.
Yeah.
Debt servicing was hitting like 15 trillion, while capital expenditure was 16. And you do know we hardly meet 100% capital expenditure.
Yeah.
And the recurrent expenditure is now, up 4 trillion. So I look at the budget, as much as it's called a budget restoration. I don't know how you have a budget restoration where a third of your spending is going on debt service. What exactly are you?
I don't even know why we named those budgets to begin with.
You have to give you names now. So
that's another
but
thing.
you last time you were saying you wanted a name, you wanted like a slogan.
No, I'm not
They're giving you one now. You're complaining, man.
So,
Restoration.
Also, have you also noticed? I think in the last 10, 15 years, the budget has always been about $30 billion. It just changes in naira equivalent.
Which is the point.
That's interesting.
It's always about $30
which is the
billion.
point that some of them also made. That look, the budget has always been around that number, right? In dollar terms, and then even as a percent of GDP, it's still nowhere close to maybe the likes of South Africa, even Ghana, in terms of their budget as a percentage of GDP. But my worry is 16 trillion, or let's even say 30 trillion, enough to actually jumpstart the sort of economic growth?
Before you finish, no.
So where are they going to bring the money
from?
from?
So this is my thing. This is my thing, right? And I still say it, right? I'm still a bit confused. Sound bites coming from the president before he became president, right? This was just him as a normal everyday Nigerian just talking about the economy, and talking about we've always known him.
I don't know what I don't know has been. There's something about your shirt that you really like. Like he's just been going this.
No, really? Can't you see? You can see that.
Got my little monogram during them. I'm admiring my monogram.
I mean, yours, man. Like just admiring the stuff.
Yeah, I love it. Sorry. Ignore him, please. Ignore him. I'm looking at you, not my shirt.
Anyway, so I've always seen him to be expansionary in terms of outlook, right? Mm-hmm. He's talked about you want to improve an economy. You need money to improve an economy. We say in Nigeria, the soup that is sweet, it's money that creates it, right? We need infrastructure. Now we can see what has happened with the blue line and red line in Lagos.
Yeah.
Right. That has reduced and alleviated the hassles of a lot of people.
Has it? Yeah.
We need a lot of people, at least those people who use it. I mean, I saw a video about a month ago, and it was like packed.
People use it.
People are using it.
We did cover it on Nairametrics.
Okay.
It's packed.
But has it done anything?
So for those people, definitely.
Okay. I guess
those people who use it. Yes. But the thing is, it's not nearly enough.
Yeah.
It's not nearly enough. We need to be able to have infrastructure that allows people to live in Ade-Ekiti and work in VI.
But Tunji, where are they going to get that money from?
That's my point, right? That is my point. I've always seen him as expansionary, right? Now, my thinking is, and this is me, go big or go home. Nigeria doesn't need a manager. I've said it a lot of times. We're like 20 years behind getting a manager. This is not where you say, okay, let's reduce the cost there and let's hold the spending there. Yeah. This is where we really need to go aggressive.
Yeah.
Think China 30 years ago, right? Mm-hmm. When everybody thought they were going crazy, right? They were going, they were really putting money down, getting money from everywhere. Yeah. Infrastructure.
It was
a strong drive. And, look at it 30 years down the line right now, and you're thinking, God, how did these guys do it? That is what I feel should happen. So a $30 billion budget is great, right? But it's not nearly going to do. In fact, I think we need to spend about maybe $50 billion on infrastructure.
Where will you get it from? That's my point.
Now, that is the point, right? That is,
you can even say $100 billion, but where are you going to get it from?
So that's the point. That's the point. So yes.
Or we have assets to sell.
We're already borrowing. We have assets to sell.
We talked about SOEs, selling some SOEs.
Did you see how much you're going to make from that?
How much? I haven't looked at that.
I will check it, but not insignificant because it's all part of the revenue they've planned for. Revenue is about 34.
So that's part of it.
Yes.
Okay.
Now, so there are several ways to get the money.
Drink
right?
the wine. Maybe
no. There are several ways. There are several ways to get the money. We know that Southeast Asia is excited about us, right?
Yeah.
And as much as they don't want to give you cash, they are very great about building the infrastructure for you, right?
Mm-hmm.
What we need to jumpstart this economy is massive, gigantic, humongous, very disgusting looking infrastructure.
I agree with you.
We can get it from those areas by not going cap in hand to beg for money, right? By going with a very grand vision that, see, this is what we're trying to create. We want to create it with you. We're not going to do with these guys on this side because, first of all, they don't even have money. They have their own issues. But we want to build this. Yeah. Forget about the fact that you are investing. You're a co-creator of this thing, co-owner of what we're trying to create. We need to give and this was what I was talking about last time, a grand vision.
Yeah, but
it works. But it actually works. If you look at,
you get when you really go crazy.
Egypt did that recently with Abu Dhabi.
You get me?
Are you going to give
whereas a $35 billion
are you going to do it with the budget or something else? That's my point.
It has to be something else because if you it's a partnership. This is different, right? It would have to be outside the budget as the budget stands. So it would have to be Egypt, for example. Looking at Egypt, Abu Dhabi, it's a partnership where we have this plot of land. We're trying to build this. You come in and you partner with us. On this, I'm talking
about projects as massive as building a Dubai. You know what it would take for you to actually sit down and think about building a whole new infrastructure city, that kind of a thing is what I'm talking about, that Nigeria needs on a grand scale. You can't do it with your revenue. How much has been our revenue consistently for the last maybe 10, 20 years? We've not, whatever the exchange rate was, we've not done consistently up to about $15 billion.
So, see guys,
so we don't have the money.
I'm trying to situate this very well.
We don't have the money.
Exactly. So I agree with you that we do need massive infra projects to give us the sort of economic growth that we need.
Yeah.
And I give an example. We need to host another Nations Cup. We probably need to host African Games. We need to have mega concerts in this country. Like, you've got to be able to do, like you said.
Do you know how painful it is that we can't do any of these things that you said? We can't do any of these things.
Hosted like Nations Cup or African Games since maybe the Obasanjo era. So
we can't even do apply to do it.
But the point is that because of the lost 8 years, which a lot of people call lost years, now we don't have the money. We're already spending most of the money that we have on servicing debt. It's very likely that we're going to run another 13 trillion, deficit spending. And then even if you look at the infra projects, some of the key ones that he mentioned in his speech was defense and security, 4.9 trillion, which I think is important, but that's even higher than infra project. Infra project was 4 trillion. That's their plans for this budget. So my point is, I don't think that the budget is going to, do much in terms of economic growth. Where we probably would need a lot of push, which I guess is to your point, is how well we're able to get countries to help fund a lot of our mega infra project, which is why I told you the key thing for us next year that I call a transition year is bilateral
trade,
bilateral deals.
Yeah.
So
I agree.
how we're able to get China to maybe fund rails, how we're able to get France or India to come help with our mining sector, how we're able to get South Africa to invest more in telecoms, how we're able to get the Middle East guys to help fund oil and gas.
And plus let me say this, and this thing really gets to me. A lot of the insecurity we see in Nigeria is out of a lot of idleness and non-productivity in those areas.
But can I ask you, between the diaspora funds or diaspora and pension funds and the asset management industry, how much of the infrastructure can we fund ourselves? Because I'll be honest with you, because this is patriot to me.
They are good at funding debt, by the way. Pension fund guys.
Good at funding debt.
Oh my God.
Actually, you can actually speak on that. I should ask you. Why aren't you in infrastructure?
First of all,
how much of your capital is in infrastructure? You're all over CPs.
So there is a drive.
You're all over T-bills and bonds. Oh my goodness, bonds.
They buy those
things. So you must think about it this way.
Yeah.
The pension sector or the pension industry is highly regulated in terms of what.
So you need to be coerced.
No. Do not coerce.
You need to be coerced.
No,
and you know what? I'm actually buying into this coercion thing more now.
I think the pension funds are bullish in where they would like to invest, but they have specific areas where they can invest
due to regulation.
So if
regulation changes,
and now I know that regulation is beginning to be more open. Because there was a circular about a month ago talking about CPs that they could invest into. We're hoping that pension funds can also invest in Euro bonds, because that also helps you. Yeah,
but even that's even negative.
No. What I'm saying,
because let's be honest, right? If you're talking about issuing more debt and the potential of issuing more debt, meaning that yields have to go up, and yields going up means that there's a potential default, you should be worried now and say, you know what? Let's look for alternatives. Let's look at infrastructure.
No.
If I buy more bonds, I'll be worried.
Yeah.
But there's an infrastructure deficit. Yeah. But we keep going to China. We keep going to. We're talking about going to Saudi Arabia.
But there is a conversation I know that is happening right now between infrastructure. I think the infrastructure bank. There's lots of conversation, a lot of engagement between both sides to be able to understand the products that will better serve both sides. In Ghana, for instance, the Ghana pension funds invest in infrastructure.
Yeah, because they had to, because Ghana defaulted. After the fact.
So the point is we don't have to default. Right? We don't have to get to default.
Unfortunately, we do sometimes. Right? Unfortunately, we have to learn the hard way.
Exactly.
Where it's like, guys, there's an infrastructure.
Ghana is invested in infrastructure projects, even housing.
Yeah.
Housing, as in mass housing, they're invested in it. And I think we dwarf their funds by a long mile. Yeah. So we can do some bit. But I still think, by and large, the money we're looking for, the problem is this, right? The kind of infrastructure we're talking about is to fill this table, right? The money we have is only going to fill this corner. If you do this corner, right?
AUM of the pension fund industry, though?
20 plus trillion.
20 plus trillion.
No, it's over 30 billion.
Naira.
$30 billion.
Pension industry.
It's almost $50 billion, yeah.
Nigerian pension funds assets.
Yes.
AUM, I doubt it.
No.
I doubt it.
Bro.
I doubt it. I mean, we can
Check.
do a quick AI search.
Yeah.
So you check, you cover this area.
Yeah.
If you take this area, right, and you put it in the middle of the table, it makes the entire table look very ugly, right? As against you did half of it.
Yeah.
You can see what the picture is, and you can see the barren side on the other side. So we don't need just splashes of infrastructure.
Yeah. I understand that. I know, and I agree.
So it's not the kind of infrastructure that even the pension funds can jumpstart, even though they can be a part of it.
I don't know. I think they can actually jumpstart, because pension money is sticky money. It's sticky money.
Yeah.
Right.
1.9 trillion. I told you.
Pension money is sticky money. Oh
yes, devaluation.
Anyway, guys. So on that note, I mean, I'm done with my own. So again,
that hit me.
That's it for me for the budget.
You're on old Naira.
I know.
Old Naira.
Yeah. I think it's something that's been I've been working on recently, very early stages is new African countries that have potential to provide what Nigeria has or even better. Right, and Ethiopia is something that I like talking about, and I have been looking at, because for most of my career, I've been doing this for years now. For most of my career, Ethiopia is the second Nigeria, right? Population back in the day when the consumer story was amazing, where you had what did you have? You had the Nigeria consumer story, the Africa growth story. Ethiopia was always right behind Nigeria in terms of population. I believe Ethiopia has a population of over 100 million people. But the Ethiopian country was never open to investors, right? Or to just anyone from the outside looking in. Currency controls, capital controls, no stock markets. All of a sudden we saw them, and I've always known Ethiopia has one of the biggest, if not the biggest, sovereign wealth fund on the continent, about $150 billion of sovereign wealth fund, and it holds all the companies. Yes, it holds all the companies in it. It holds Ethiopian Airlines, the mining companies, the banks, everything in it. And all we know if Ethiopia is they issued a Eurobond a few years ago, but then they missed payments this year, about $33 million coupon payments last year or this year, and that's the defaults. And then all of a sudden they did something really interesting, is they opened up the currency and allowed currency to go in, to move freely in and out, allowed effects to move freely in and out. And now what we're seeing is they're announcing a stock market open up. So for me, it's just interesting as an investor, because we are, as investors, always trying to look at the next, or the other
emerging markets,
next emerging markets, right? Other ways we can make money, other places we can invest. So Ethiopia is something that's on my mind, and I thought I'll bring up here for us to sort of hash out a little bit where we can and see what you guys think.
So I can't remember, I was there. I can't remember when it was, but I did see a few things about the market that interested me.
Okay.
It's a decent consumer economy.
Oh, yes, it is.
They have all the trappings of a vibrant economy. If you just drive around the cities, you'd see that there's some vibrancy. I still think that they're more open to the Western world than they are to the rest of Africa, in terms of business participation.
Okay.
That is my my feeling just from that last visit. But in terms of a growing economy, a vibrant economy, I do think that yes, they do have all the trappings of a place where you would like to invest. And in fact, I did, I've been having conversations about wanting to situate some sort of operations there, because it does look vibrant for what we do. Yeah. Honestly, without a doubt, as in I could clearly see my market, just walking around the city, I could clearly see my market. I could clearly see how I'll distribute. I could clearly see the partners I would distribute with. It was just very straight line. It wasn't, I didn't have to think too much. Yeah. And that for me was pretty decent. Okay. Tunisia, for instance, I didn't see that. Tunisia just kind of made me feel like I was going around a bit confused. I think even Morocco, I felt the same thing. I was like, what's going on? How do I situate? But with Ethiopia, it was. It looked like if I work with, if I talk to this person, I could see it. I could see it. So I think they do have that, all the trappings of. But again, my thinking is, and I might be wrong, I do think they're more open to the Western world, maybe even like Asia than the rest of Africa.
Okay.
All right. So as you guys were talking, I was just checking some Ethiopian macros, and pretty interesting. So. Government is saying growth rate at 7.2%.
Better than 3.4.
Even though there's small jungbe around it. I think 2024 was around 8.4%. So growth rate pretty decent. Faster than Nigeria.
Yeah, it's always been up there.
Inflation rate around 20%. 2024. Interesting. Fiscal policy, budget deficit as a percent of GDP, 2.1%. Nigeria is currently over the approved 3%. We're at 3.4% or thereabouts. So there's at 2.1%. external debt, which surprisingly, I don't know why they defaulted.
Shocking.
Debt.
$33 million default.
So
very strange.
So I think from what I see here, perhaps looks like their macros are pretty good. A good story. I think I don't think there is any Nigerian bank that's currently operating in Ethiopia.
No,
if there's any Nigerian company there, I think
that is my point, right?
Dangote Cement, I think, is the only, probably the only Nigerian company,
that's operating there. Yeah, I believe so too.
In Ethiopia at the moment. I think there's one e-commerce company, even though I think Gigi, operates there.
But Gigi is not Nigerian.
But Gigi is not Nigerian. But even though.
But you see, that's my point, right? You just need to go to the city, and you'd realize that there's opportunity for almost every business that we have here.
Don't they have political issues there?
No, it's not. It's not political. It's more
because they're recently in the war.
I'm not even sure if it is
with
social.
each other. Yeah.
I'm not even sure if it's social.
Is it social? Is it ethnic?
I think so.
Yeah.
There is something you can feel it.
Unrest,
they're not hostile. They're very friendly. But will I say very friendly? They're just like, they mind their business. They just do their thing. So it's really, again, of all the countries I've visited, right? If you ask me the place that I would really like to expand into first, it's there.
Yeah.
Even over Ghana.
Even
over Ghana.
Wow. Okay.
Even over Ghana.
Why?
Because
I need to. Why? Because for me, I found Morocco very open.
Ghana, you can feel like Ghana feels like a slightly more combustive Nigeria.
Okay.
Slightly more combustive, it's like you can feel the people, you can feel competition, you can feel, and then you also still see that a lot of it is not going in the right direction. Ethiopia, for instance, is like you can see the alignment with almost everything.
Okay.
So everything works as it should work. I think that's the thing, right?
But
it works like it should work.
But
businesses work
Nigerian
right.
businesses and businessmen tend to like Ghana as an extension of Nigeria. So it's shocking. It's interesting that you say that you find Ethiopia more
I think Ghana, for me, Ghana is lots of effort, not so much of the upside.
Oh, okay. Well, what's your definition of upside? Is it small population?
So how much are you going? So yes, the ticket size for everything you buy in Ghana is slightly higher, right?
Okay.
So
higher cost of capital, higher cost of entry.
So my product, for instance, where a Nigerian will buy for $2, the Ghanaian is ready to buy for $10.
Yeah.
Right. But while I would sell my $2 to 50,000 people, I would struggle to find 10,000 in Ghana.
Okay.
One thing I think then my setup in Nigeria is a lot quicker than my setup in Ghana as a foreigner. Maybe for Ghanaians it's easy, but as a Nigerian it's a lot more difficult. You get?
All right.
So
your own story. So are you guys going to Ethiopia, by the way?
I'm still there. So I thought of quickly. This is just a small segue conversation. So the CBN last week issued a circular about. I don't want to use payment companies, more like agents, POS operators, and capping their transactions to 500,000 a week. There is a conversation around it, and there's a backstory, right? The CBN has been trying to do a few things to try and curb some of the activities that have been happening through those. Now, if you do not know and you're not in Nigeria, some, not all, some of the POS operators have been used as outlets for all sorts of activities. So somebody defrauds somebody and then money moves from account to account. The outlet usually is through that part.
So that's why they had that cap that they put out there.
Yeah. So at first it was, everybody needs to be registered with CAC. Trying to formalize the POS terminal guys, right? And this cap of 500,000 is great, but what it means for especially the bigger POS operators is that they are not going to be doing as much turnover as they used to do. So what that means is that they're either going to get more terminals to be able to do 500,000 many times, or they will increase their prices. So cash becomes expensive on the streets. We do know that there are a lot of times we go to ATMs that are not funded. It almost feels that banks have not been active in funding the ATMs of recent, right? That is a challenge. So the thought for me is, I do get the CBN stance in terms of this thing has become because we've made it easy for financial inclusion purposes, we're trying to get more people included. We made it very relaxed, and I think it has now become a problem. So it's become a channel for people to do all sorts of things in. So let's try and cap it. I really don't mind capping it. I mean, capping is one thing. It's all the other things. There was somebody that was trying to raise a conversation saying that it's the big banks trying to fight the fintechs. I don't really think so, because the fintechs also, question what happens in that area. My thought.
Yes, here.
No. So, on the fact that these guys are now being capped to 500,000. Just here, in just my small narrative, I've said how many ways they can work around this 500,000, right?
Mm-hmm. Yeah.
Get multiple POS terminals, increase. There are too many ways you can get around it. That really isn't the cure. I think, right, that Nigeria continues to look at the POS terminal as a stopgap to mobile money. It feels like we're deliberately trying to get to mobile money. As in, because Kenya is mobile money, right? And Kenya's mobile money is fantastic. Ghana's
What's mobile money?
So you can use USSD transfers and do transactions USSD.
Don't we have that already?
No, we have that, but it is not as big. It's not as big as...
So, Tunji, I once asked that question, how did we turn into a POS?
Yeah,
it's a
good question, because
need POS.
Yeah.
So no. Let me laugh so that you get where I'm coming from.
Okay.
Let me give.
Because it doesn't. I'll be honest. This is not my world. It doesn't affect me. I don't know how I sound.
Money,
I don't know how I sound.
POS, like,
when I saw this coming, I'm like, this is not my world. It doesn't affect me because I pay with my card and the transfers. I don't even use cash.
Yeah.
I'm a cashless Nigerian.
Here is the thing.
But I don't want to sound
elitist, right?
No, I don't. I just. It's not my world.
You remove from it, right?
Yeah.
So, but here is the thing. Here is the thing. I do find a thing that I. So, POSs have become the mainstay for a lot of people in Nigeria, especially as ATMs became less functional.
No.
My question that I keep...
Especially as what?
ATMs became less functional.
I thought it was because of something led to another. It was because of POS that ATMs got less functional.
I do not know which. I do not know which started which. It's chicken and egg.
That's it. It's not the chicken and egg situation. The point is that ATMs became less functional
because the POS
the people who were facilitating this craze allowed POSs to fester. And for that reason, they killed ATMs. That's the point. So I've heard stories around maybe ATMs are too expensive to maintain, and maybe CBN was allowing them to have ATMs.
It is.
I don't know, but a lot of the bankers that I spoke to say, look, that's not really the issue. That's not really the issue. So the issue has always been for them with ATMs is the price, like the cost of withdrawing. No, the withdrawal cost and all that, and then how that helps with maintaining the ATMs. Yeah. That's always been the issue because CBN has never really allowed them to. I think even during the Emefiele's period,
they removed the fees.
Reduced the fees or even removed it or whatever.
Yeah.
So that has never been a substitute.
So my question is, are we so determined to get to mobile money that we are overlooking what is possibly working? Because now get my point. If mobile money was the end point that was lax, what we would do instead of trying to stifle it is to create tighter regulations around it. Improve the system, make it more efficient, make it less cumbersome. So for instance, if fraudulent funds pass through an ATM and there was a easy mechanism to be able to report that particular POS, sorry, I said ATM, that particular POS, and then the POS gets blacklisted, it's only a matter of time before you blacklist the major touch points, and then you have a cleaner system. I'm saying with the POSs, shouldn't we be thinking more around cleaning it up?
I think we should be getting rid of them.
I'll be honest with you.
Yeah, wow. I'll be honest with you. I think maybe it's because I live in Ghana for 5-6 years, and in Ghana I feel like mobile money, Momo, they call it Momo, so mobile money, whether it's transfers bank to bank or number to number, is just makes payments so easy and seamless. So when I moved here last year, I'm confused about POS. What's that? And this is why I like MTN as a stock, because I think the mobile money, especially now the POSs are getting diminished, use that word, mobile payments are going to become
why
more
are we
active.
trying to kill something that's working?
What's wrong with mobile payments?
What's working?
What's wrong with mobile payments?
The POSs are working.
But what's wrong with mobile payments?
Nothing is wrong with it.
So let's just
understand again. There is a small nuance that we're overlooking. In Ghana, there isn't the CBN NCC issue.
What's the CBN NCC
where
issue?
There is a small Chinese war between the communications regulator and the banking regulator. Okay. That doesn't exist in China. Neither does it exist in Kenya. So, for instance, in Ghana, you can easily convert your airtime. Correct me if I'm wrong. Yeah. You can convert your airtime to buy stuff, right?
Well, you have a wallet.
Yes.
Your mobile money wallet that you can send back to back.
Yeah.
So it's not necessarily airtime. There's airtime. There's data. There's your mobile money wallet.
So, what was the objective of POS and mobile?
That's my point.
Hold on. So let me get there. So it's financial inclusion. That's the big picture.
And did it work?
So good. So wait now.
Did it work?
The big picture. No.
POS
the big picture is financial inclusion.
Yeah.
You're trying to get the people who are financially excluded included. How in this world does POS help you achieve that? Because the whole idea of financial inclusion is to get the informal market to get into the financial services sector. Do you want me to show you how?
Do you want me to show you?
What has happened is that we've gone from trying to use POS to have people, trust transactions and all that, to now turning it into another way of hawking cash, because that's exactly what it is. How is POS any different from the people who hawk cash in parties? Talking about parties, I just want to segue into my own topic.
Isn't that what happens in Kenya though?
Or holding cash?
Isn't that what happens in Kenya?
What's my business? What happens in Kenya?
No. But I'm saying the mobile money conversation. Yes, they do the same thing. But my point is this.
What happens in China?
So in the context of inclusion, in the context of trying to get more people to do more financial transactions, what my point is that Nigerians at the bottom of the pyramid, for whatever reason, because we don't know how this POS craze started, right? But for whatever reason, it has become a mainstay for many Nigerians. So much so that they would rather go to the POS guy than go to the ATM, right? For whatever reason.
Because now, the ATMs are not working. They've made it not to work.
Have a limit of cash.
Exactly. Not just
that.
But
before even started happening, they were just more accessible. Now, even the thing I have realized, and the questions that I continue to pose, is that the POSs now have the capabilities to do a lot more, right? It is not just cash in, cash out, right?
What else can they do?
Oh my God! You see, that's the point.
That's what I'm saying. It's not my world. I don't know, because
I should have brought one of our POSs. I should have brought out one of our POSs.
Oh yeah, let's do it.
I should have brought one of our POSs. So one of our POSs can do onboarding up to taking pictures.
Okay.
Up to taking onboarding customers, bank customers, you can onboard. So we don't do bank customers, we do onboarding. So micro pension
all
customers.
that is fine with a POS, but that's not the issue here. The issue here is why all of a sudden if you come into Lekki Phase 1 in the morning, just drive into Lekki Phase 1 in the morning, you will see people queuing to sell. Like they basically have the POSs in their hand, and then all they are doing is just selling cash.
And there's a fee to this.
There's a fee. There's a fee to it.
There's a fee now.
But it's also a fee too.
Isn't it cheaper to transfer more?
Exactly. So what we're trying to
whatever.
There's a fixed fee to transfer.
And guess what?
I
don't. Guess what? As we're talking about POS, go look at the money supply data.
Yeah.
Currency outside bank continues to increase.
Yeah, it's 197%.
It's a 4 trillion. So you're actually defeating the entire purpose of financial inclusion. Because the whole idea is that you want cash. No. Listen, financial inclusion is that you want a lot of the cash, the transactions.
First of all, financial inclusion was. I know that I'm going to. A lot of people who've known me for years are going to be like, well, what I'm going to say, but financial inclusion was a scam.
No.
It was a scam.
No.
At least what they told us
the
was
entire
supposed
process
to
or
be.
whatever. Financial inclusion is essentially trying as much as possible to get a lot of the informal transaction.
Formalize informal
economy.
And because when you do that, then it essentially forms part of the foundation for economic expansion.
That was
growth.
What we were sold. This was what we were sold.
So what is it? I mean, that's what I bought.
It's not
what is
this?
It's not
what it was sold. That's what
Okay. So yes.
So if you now all of a sudden turn it upside down by allowing POSs to sell cash, then what the heck have you done?
No. Because we could do a lot more things. So for instance, like this 500 case conversation, I think what we need to do is to get people more comfortable with working outside cash. And we've seen it so part of the reasons why people, and it's also what happened in Kenya. Let's not forget, what happened in Kenya was people stopped trusting the banking system. And then there was a fintech that came out with a solution that if you sent to me, it got to me immediately.
Kenya has nothing. I say it every day, anywhere. As far as I'm concerned, Kenya has nothing when it comes to the sophistication we have.
No. I'm saying there are versions. I was going to come to Nigeria
because I heard a lot about all these. There are M-Pesa and all that.
No. I'm saying there are versions of it in Nigeria too. Yeah. So in Nigeria, there was also the conversation of if I send you money from bank A to bank B, it'll take you a while to receive it.
Now.
No. So even now it's still. Okay. But there were few fintechs that came through. I don't know how they did it. I don't know what they did, but it got to the point where if I sent it to you and you do not receive it in 2-3 minutes, we can agree between ourselves that it failed, right? Just because of the efficiency of that system. Okay. And those were the fintechs that took the rise between all of them. So as a system, they became number 1, 2, 3, and everybody that's watching this could know the names I'm talking about. Even with the POS system, there's a particular POS operator that if you put your card in it, right, and there's a transaction happening, right, even before you get, you're the one that owns the money, before you get the alert, they get an alert that it's gone through. You get so those systems. So I'm talking about the sophistication is there. I'm saying, and this is the whole logic to this, right? Instead of trying to kill what the people are comfortable using. Now, you are not part of the people, both of you, right?
Who's comfortable using?
The people
so
are comfortable. No, you are not the people.
You're saying Nigerians are comfortable using POS?
Yes, they are comfortable. Can we, instead of trying to frustrate, because I see that's the end game, right? Okay. Can we make it sophisticated? Can we clean it up?
How do you?
All right, guys. Wait a second. In case you're watching, this is Drinks and Mics. We discuss money, finance, and everything you can think about. Of course, over drinks. I'm just gonna segue into my own topic because I don't know what Tunji is on and about, but let's just segue into what I think is probably gonna be the final topic. For this episode of Drinks and Mics, and I was gonna talk about corporate parties.
Okay.
Yes.
Party.
Yeah. So
what about it?
Every year end.
Yeah.
There's always corporate. I could remember growing up and. My mom then I used to look forward to their end of year party, because then kids we all go there, we eat rice and all stuff, music and all. It used to be pretty fun.
And they always had the children's corner.
Yeah, children's corner and all that stuff. But I think corporate parties have basically, graduated into real concerts. Big time events like concerts, right? So it's now a huge platform for a lot of Nigerian artists to come on, play and all that. So my I don't know what I'd call it, question or my thought process is there some kind of commercial play here? Like
commercial play?
No,
is it just we could just splurge for the year and all that, or do these companies who do these parties actually make money out of it? I don't know.
I've never thought about that.
So is it a brand play? Like what exactly? Because it's almost like there's a
competition. What's the reason?
There's a competition for it now. You don't exactly. So I don't know, man. There's a competition for it now. Like you see this, and it's not just a regular competition. Like even competition for the artists that come to play. Like corporate parties can cost as much as, by my own estimate, minimum 200 million.
Oh wow! What parts have you been to? And I didn't get an invite.
To get Davido,
my invite.
To get Davido to come and play, or Whiskey or whatever.
Yeah.
Now,
it's
how much you could drop? It's like hardcore. 40 now. Do you understand? And you can have like 5 or 6 of them.
Okay.
Complete.
Not all of them. Not all of them 50 million, by the way.
No. So at least you can do. Ask the guys that organize these things. You can do easily 100M on artists.
No. I don't think. So for the big corporations, 100 million is like nothing, because by the time you pay the first guy, even the whole, the
entire dress code, deco, the whole thing. Yeah. So I kind of think that because companies don't just splurge like that.
Yeah.
I mean, come on now. We all run business.
Is it possible?
So there's gotta be some commercial play to this thing.
It could also be a lot of ego. Is it possible?
To the company.
Like my brand is bigger than yours. Yeah. So last year you did this. I'm gonna do something bigger.
I don't know whether.
So you got this big arena. I'm gonna get bigger one.
I mean, I'll be honest. I've always just seen it as
who brought. That was the government.
Finish. Don't be shy. Finish.
I just thought finish. My thought process went through.
No, but for me, it's more of a way to say thank you to your staff, right? Say well done.
Is it really about your staff? Because they're always at the back of everything, right? They're always at the back.
Am I naive?
Staff or customers or friends?
It's never the customers. It's hardly the customers.
Client, because you invite your biggest clients as well, right? You invite your clients. Your.
I mean, I've seen some of the ones I've been to. You've seen governors come. You've seen.
But when is it really about your biggest clients? Is it? I don't think it is. There is something, but I think it's about brand positioning also. It kind of signaling that we did well this year.
Do they do this abroad as well, though, or is it a Nigerian thing?
Yeah, they do it abroad. They do it abroad. In the tech scene abroad, it's actually more ridiculous.
Yeah,
it's really ridiculous. Yeah, finance is also crazy. Big parties, as in parties that no cameras.
I don't know what you're talking about.
So is this something that I mean, we should encourage, have it maybe. Did you?
Man!
I'm wondering whether Tunji is going to do one this year.
Yeah. So if you're gonna be like Tunji and talk about the people, if you're gonna be like Tunji and talk about the people, then maybe we shouldn't, right? We should be more sensitive to the economic environment.
No. So let me say from my perspective. From our perspective,
right?
We've always done it from the perspective of the harder the year,
the bigger the party.
No, the harder the year, the more I feel a need to want to
show off.
No, not show off. To say thank you to the team that made it happen.
Yeah, this is what it is. Yeah.
So the harder the year, the more you want to go really hard on that party. Like you guys you killed this year.
Yeah.
So let's let loose. Like for once in a year, every year we've been, we had all those days that were, locked up in the office for hours and hours and hours. Let's really let loose right now. So
how do you determine how much you spend?
The harder the year.
No, like, so is it a percentage of revenue or like what's the? I mean, I don't know if it's you, like. Because I know it doesn't look like it looks like you're just going to be hopping on people's parties. You're not going to join anyone.
So usually,
I'd rather hop on yours. I'd rather not spend any money. I'd rather give it to the staff as a bonus.
Ooh.
So I'm a big bonus guy. I'm a big bonus guy. I'm a huge bonus guy. Are you
suggesting the same guys who are doing this party are not giving bonuses?
I don't know, bonuses. But I'm a huge bonus guy. I'm a huge money guy. I'm cash. I'm payments. I'm bottom line. I'm profits. I'd rather just give.
So there is the bonus.
Well done, and I'd rather be known for paying extraordinary bonuses.
It still says the same thing.
Yeah,
you've done well.
Yeah,
and because if the year is bad, you won't see a big party. I mean, it just goes to say if the year was bad and you are throwing a big party, somebody should question something, somebody should be asking questions. There's some delusion going on within that entity. But if the year was really hard and then you guys ended good,
you did well, then you should get a nice bonus.
So are you guys attending any parties?
I'll come to your party.
We had
on that note.
That's the point. They had a party and they didn't invite us.
Oh, wait. I was about to end this.
I saw
you
pictures.
Guys know?
I saw pictures on your Instagram. No, not at all. Were you next to Whiskey?
Next year, bro.
Were you next to Whiskey?
I just saw in his stories like end of the year party.
Yeah.
Next year.
I'm like, what?
Next year.
Can we do another one now?
We invited him to ours.
In another hour.
Most def. Tunji's always fun, by the way.
Okay. When's yours? You said invited, so it's happened.
So we tried to, shut down places, just us.
That's
so when is yours? When are you where and when are you shutting down?
We shall be
Thank you. Shall be televised. So on that note, ladies and gentlemen, thank you for tuning in to Drinks and Mics. And we'll see you again next week.
Cheers, man.
Cheers. Oh, cheers. Thank you.